Hello and welcome to the Money Magpie Invest Podcast. I'm Jasmine Birtles, founder of Money Magpie, and today I'm speaking to Charlie Morris from ByteTree, who has also set up a fund called the Bold Fund, which is, wait for it, just Bitcoin and gold. Hello, Charlie.
Hello, Jasmine. Pleasure to see you again.
Great. Well, I'm very interested to talk to you about your Bold Fund. I mean, as I say, you do loads of things. ByteTree is a really interesting website to see all the research and everything. But you have actually set up a fund that is music to the ears of people like me who are big fans of gold and Bitcoin because it is purely gold and Bitcoin. Can you give me a bit of history about the Bold Fund? You know, why you started, how you started, when you started, and what it involves?
Well, the history is, I guess, what was the inspiration for the idea? Well, I think I've always been a gold bug for years, like 25 years. I've been following the gold market. I came across Bitcoin in 2013, skeptically at first, but got my head around it and fell for it, and it didn't take me a long time to figure out that these things could go together. And I'd been working on another concept with gold, which was gold and growth stocks. So basically, I was sort of saying that if you put tech stocks next to gold and rebalanced and this sort of thing, then you'd actually have a really nice outcome. Because when tech stocks are crashing, gold's probably doing okay, or at least it's stable. And then when the world's going to hell, gold's probably doing quite well, and the tech stocks probably aren't. And so it worked out, and I just kept playing with this concept. And then I realized that actually the perfect fit was Bitcoin and gold because they were naturally uncorrelated. Gold is a sort of, as I just said, a sort of risk-on, safe haven asset, thrives on uncertainty, and there's some monetary things as well in there. But Bitcoin is just a sort of risk-on, growth asset, and that's that really. And the only last bit was, how much Bitcoin do you own, how much gold do you own? And the answer is not 50-50, because if you own 50-50, your chances of making or losing a fiver in each is, you're more likely to lose or make money in Bitcoin than you are in gold. So if you want to risk weight it, which is the magic thing that we've done, which is dead simple mathematics, by the way, financial maths, it comes 3-1. The answer is 3-1. Three golds for one Bitcoin in money, and then you have a nice balanced outcome.
So can you show me how it works, how your fund, how the Bold Fund works, and how it's done? Because you set it up 3 years ago, didn't you? So how it's done year on year over those years.
So with a website called the Bold Dot Report, it's you can all go and look at this. This is the Bold Index, which the fund is basically a Swiss ETF. It's listed in Germany and France and the Netherlands, because it's got Bitcoin in it. Like all ETFs that contain Bitcoin and other crypto, UK investors can't buy it. I'm sad to say, but
Okay.
nevertheless, we can still talk about it. Um, it tracks the Bold Index, and this is that, and it goes back 10 years. The fund, the ETF ticker Bold is just goes back 3 years, or April 27th to be precise, so nearly 3 years. And it's done very well, as you can see. And if we sort of look at it over 2 years or whatever, Bitcoin's had a very strong performance over the last 2 years. It's up 3 times, but Bold's up 2 times, and you've only had 25% weight in Bitcoin. So it's nearly done as well, which I think is quite impressive.
So I'm
And
just
got
looking at these graphs. So you've got the orange line is the gold, the blue line is Bold, and the black line is how Bitcoin has done.
Yeah. And sorry, I should have nudged those up a bit so people could see. The problem with knowing your own charts so well is you forget that no one else knows what they are. But let me just show you a highlight. There's some sort of links to bonds and to break, inflation expectations and the dollar. But this is quite fun. This is Bold Index against the S&P. So Bold's obviously in blue, S&P's in red. So it smashed the lights out of the S&P over the
Mm.
last decade. And then you say, okay, what about the Nasdaq, which has been the strongest index in the world over 10 years, and it hasn't done a bad job against the Nasdaq either, with
Mm.
about the same level, with a very, very similar level of volatility. So it's not like you've taken huge amounts of risk in the Bold concept.
So
Um,
it's as an investor myself, I am pretty irritated that I have been prevented from putting money into this, and that I'm being prevented right now. Is there any hope that we in Britain can put our money into the Bold Fund if we want to?
well, I mean, elected professionals can, and that's something that the FCA's website says who is and who isn't. And basically, if you work in the city, you've passed 2 or 3 tests. You've got to work in the city, as in you've got to work in the financial services industry, or you've got to have a certain amount of money, which is I can't exactly remember, something like 250,000 euros of assets, something like that. But I think it keeps changing. And then the other one is you've got to have a certain amount of experience, and I think that means you sort of have you do a dozen or so trades per quarter.
Mm-hmm.
You can pass two of, there are different interpretations of the rules, but if you can pass two of those, you can declare yourself the next professional. And in theory, a broker will take your order, although most brokers won't take your order because they're quite eager to keep crypto ETPs out of the system. So some brokers will, but most won't. And
Why do they want to keep crypto ETPs out of the system?
because I think it's just been framed by Bitcoin and so on has just been framed as this sort of evil thing.
Mm.
And frankly, gold was a bit like that 25 years ago. I mean, gold's really grateful to Bitcoin because it took all the slack.
Well, as you say, gold was in a similar kind of position, and it does seem to me that the FCA, in its attempt to protect us, is actually stopping us as investors from making good money. Because how much money has your fund made over the last 3 years? What have the returns been?
The return's been amazing. Top of my head, it's I tell you what, bold in GDP last 12 months is 33.6% with a volatility of 15. So that's been not much riskier than the FTSE, but way higher. So
Yeah.
that's great. I mean, that's to put that into perspective. That amount of return. So if you sort of take the annualized return in the last few years with the volatility, you get a ratio called a Sharpe ratio, which is how much money you made for how much risk you took. And bold, I don't think there's an ETF in the world that's got a higher Sharpe ratio ever anywhere. And it's banned. I mean, it's a bit crazy, but I think that the bullish thing about that is the world's got $500 trillion of assets, and the wealth management industry controls about a quarter of them, $125 trillion of assets, let's call it. And the amount of Bitcoin they own is approximately zero. And so they're coming, knowing that 125 trillion is going to buy Bitcoin in the future is something that gets me out of bed in the morning. It's like,
I bet it.
they're coming.
There again, it is interesting that you've got gold and Bitcoin because among many of my friends, it's one or the other. You're either a gold bug or you're a Bitcoin maximalist. The two don't normally fit together. So what was it that made you, because you, as you say, used to be a gold man and then you got into Bitcoin. What was it about Bitcoin that you thought, oh, this is something, this is worth actually considering?
Yeah, well, I think the technology, I find it very interesting. And I just thought that it was going to be a global neutral asset. But let's put my fund manager hat on. I used to be, I call myself a multi-asset fund manager. That's what I do for a living. And so I think about different types of assets and how they fit together. You can have a low risk bond, like a 1 year gilt or something is not particularly risky, but you could have a long dated corporate bond where the company makes no money, which is hugely risky, but they're both called bonds. Yeah. And the same is true. You could have a share like Unilever, not particularly risky, and then you could have some junior mining stock that hasn't even found, doesn't even know what it's trying to mine yet. And that, of course, is hugely risky. They're both shares. And I think that's true everywhere in every asset class. Gold is the least risky commodity, and Bitcoin's the least risky, most established crypto. It's the biggest, it's the most liquid, it's the least volatile of all of, and the most distributed. It's also very important. Gold again, hugely distributed. I mean, most people in the world own gold. Certainly the women and quite a few of the men, particularly in Italy, places like that. And so you've got this two assets which are both alternative assets. Yeah. So most things are financial assets. So your house could be rented out, and then you've got a cash flow. You've got shares that pay dividends, bonds that pay coupons, and this sort of thing. Alternative assets are not financial assets. They don't have cash flows. So we've got the crypto sector, we've got commodities. Now, commodities have a value because they're consumed, apart from gold, but generally they're consumed. And then you've got art and fine wine, and a view would be sort of intangible in some ways. So there are lots and lots of things which are alternative assets which don't have cash flow. And the city's been, or the financial services industry, spent the last 20 years, 30 years trying to financialize everything, infrastructure and bridges and tunnels and all these things, contracts with the healthcare system and everything they want to financialize. And maybe you want to say, actually, I want something that's outside the financial system. And you get to a short list of commodities and crypto and some collectibles. And you very quickly realize that gold and Bitcoin are the two most liquid. Yeah, so gold's the most liquid commodity. Oil is very liquid as well, but you can't store it as an investor. It's hard to store long term and in physical form. And then you've got in digital, as I said, you've got Bitcoin. And these two things are counter-cyclical. So it just struck me that this is a natural pair. If you want to own the best alternative asset combo on earth, which is liquid and all the rest of it, this is it. You don't muck about with some crypto coin that may go up 100 times. That's not the point of this exercise. You don't say, oh, I want silver rather than gold because it's more volatile, it's got more upside and it's less liquid. No. This is supposed to be a big money mainstream solution. Gold is the modern equivalent of gilt edged.
And it is interesting to note that the gold and Bitcoin kind of work against each other in a sense. When gold is popular, Bitcoin isn't. When Bitcoin's popular, gold isn't. Why is that?
Well, one's a risk on off asset and one's a risk off asset. I mean, as I said, Bitcoin's highly correlated with the tech trade and has been for a long time. It used to be social media stocks at the beginning because it came from the internet. So why wouldn't a digital thing from the internet behave a bit like the pictures of cats and how often we tweet these things around the place? It did. The number of Bitcoin transactions grew, and it was all about transactions, and that was basically our interest in the internet. But it shifted in the last few years from social media to tech in general, and microchips and NVIDIA and these sorts of things. And so, yeah, it's a sort of alternative asset tech stock. And gold, and so basically growth end of the stock market, let's summarize that as. And then gold's always been a bond. It's always behaved like the bond market historically. Now, ironically, when the bond market goes horribly wrong, like in the 1970s and today, yeah,
Yeah.
gold goes, actually, I'm a proper bond. I'm the real bond here. When the bonds aren't working, I'm going to step in and show you what a proper store of value looks like. And the whole world's central banks are clamoring over each other to accumulate gold. The only ones that aren't doing that are, first world countries like, well, I don't know if we're still first world, but we were once,
Yeah.
Britain and Europe and America and so on, are not accumulating gold, but the rest of the world are.
Yes.
All the emerging world, they can't get enough.
But what about Bitcoin? Because I mean, I've got friends in the city. I've got some who are saying, "Oh yeah, Bitcoin, Bitcoin," but I've got others who are going, "Oh no, it's just a Ponzi scheme. It's just fraud. It's nothing. Whatever." But my friends who are particularly those who are Bitcoin maximalists, they are saying that in the next 3 years, they think it's going to go ballistic. That there's not going to be enough Bitcoin for the demand, as it were. How do you feel with Bitcoin particularly?
There's always going to be enough because the mechanism is price, right? So you put the price up and you've got more effectively, haven't you? If
Yeah.
people are $100, then double the price, and then your $100 suddenly there's enough to go around. So I don't suggest I don't buy the idea that any asset there's not enough of it. It's a question of price. That's how free markets work. But I do get the idea of what your friend was saying, which is there's going to be high demand because the interest in Bitcoin will continue to grow. And yeah, I mean, I suppose the top is when no one says it's a Ponzi scheme. People have been saying it's a Ponzi scheme for years,
Yes.
and I do laugh at that because it just shows apart from anything else, they don't know what a Ponzi scheme is. Because a Ponzi scheme is an outright fraud and it's disguised. Bitcoin is an open and transparent network, and you can see, the blockchain's publicly available. You can see exactly what's going on, and there's no fraud about it. There's no marketing department. Bitcoin hasn't got any employees. It's just a thing. And so, who are you blaming for this Ponzi? I mean, it can't possibly be a Ponzi. The other thing about Ponzi's is they have very low volatility. And Madoff famously had 7% volatility in his hedge fund, which was a fraud, which is half that of gold, by the way. And Bitcoin's about 40. It used to be 140. So, if you were going to make a Ponzi scheme, you'd probably want the volatility to be much, much lower than it currently is. You wouldn't do it. And there are crypto projects called Ponzi Coin. When in the white paper it says, "I'm going to steal all your money," and people
And people still invest in it.
and it is very funny. But of course, it's not big money, and I think people who are investing in it, it's the only asset with class with a sense of humor. I mean,
Yeah, yeah, absolutely. And
it's a
but
project.
on the opposite side, the other question about Bitcoin is, do you see it ever becoming a genuine currency? Because at the moment, as you say, it's a store of value. That's the way people are seeing it. They're sort of seeing it as digital gold in a sense, but better returns. But could we get to the point where it becomes the system by which we actually buy things across the world?
Yeah, and the word currency, I mean, I think it means a lot of different things to different people, and if you put it into a historic context, it changes, and so it is a word that doesn't necessarily have consistency through time, and
Mm.
we tend to use a currency as a means of exchange in a country and a store of value and that sort of thing. And the pound works fine in the short term in Britain. The dollar works fine in the short term in America, but they're not good investments long term. We all know they're going down long term.
Mm.
So we choose to own assets. So I tend to think of gold as an asset, and I tend to think of Bitcoin as an asset. And of course, the gold standard basically had the monetary system hanging off the gold price for years, right? Fixed to the gold price, and you could recreate that model. I mean, they should probably use the bold price, but use Bitcoin and gold because it makes more sense. It's got more natural inherent stability about it.
Absolutely. Yeah, would to me. Yeah.
Yeah, but I don't think the governments need to do that. I think that if the gold price is going up, it's telling you the financial system isn't working correctly.
Mhm.
Yeah, the messaging is enough. Yeah, the
Yeah.
fiat system sort of works. I'm no great Keynesian, um, but it sort of works in the sense that the government can pull levers, and they don't really want to be in a system where they can't pull levers,
Mm-hmm.
which is what all the Austrian economists say. We'll just take all the responsibility of finance away from governments. They're too stupid to know what to do with the money. They'll just print it. I understand that, but I don't think the electorate would enjoy some hard ass Austrian economic regime. Austrian School of Economics, not
Yeah,
the
yeah.
country. So for those
On Mises, etc. Yes.
exactly. So will it be taken more seriously, Bitcoin? Absolutely. The number of central banks only it will increase. It may even include the USA soon. And so then, the question you asked at the beginning, Jasmine, was about why can't you buy these things in England? Why are this and that banned and restrictive nature? Why does the financial service industry turn their back on this and think it's a Ponzi scheme, or still call it a Ponzi scheme, or not spend any time trying to understand it, and just
Yeah.
blatantly rejecting it?
Because I mean, I'm assuming if you are an elected professional and you can invest in Bold that way, and you said off air that I think AJ Bell is a platform that you can actually buy it on. Is that right?
Well, that's the rumours going round that
Oh, okay.
they're the first platform to take orders for elected professional investors. And I've been in touch, but haven't had a reply yet. But I guess everyone will know that now. You've just said it, Jasmine. So that's going to be fun.
So it's possible because the next question I would have is, oh, so that means I could put it in my ISA then if I can invest in it through AJ Bell or some other platform, I could actually pop it in my ISA.
Nice to see it. Yeah, absolutely. Why
That's
not?
great. Well, that would
Until
be
they change the rules otherwise. But currently, that's actually you can do that. The fact that most brokers won't let you is another matter. But
yeah,
the law's never told you can't.
it's hopeless, isn't it? Well,
Yeah.
look,
And this is not, to be clear to everyone that it's not just my bold product. It's all crypto ETPs. So whether they're Solana or Bitcoin or whatever.
exactly because if you read American articles, they'll talk about how you can invest in this particular crypto ETP or that one, and you think, oh, that's interesting. Oh no, I can't. I live in the UK, so the only way around it, I assume, is either if you have a residency, or you can say you've got a residency somewhere else, one of the European countries or America, or just hounding some of these broker platforms.
Yeah, I mean the broker platforms. I mean, so some of them have just said, well, we don't do the elected professional thing. We don't accept that argument because we just look after retail investors. and so they won't treat you as a. But that's not true. I mean, they're all making this stuff up as they go along because it never used to be true, and they've changed the rules when Bitcoin came along. How do we ban this thing? And make it not look like we banned it. So that's a sort of challenge if you're on the dark side of these things.
I suppose finally, the other way to get around this is to just copy what you're doing. So buy gold, buy Bitcoin yourself, and sometimes buy more gold, sometimes buy more Bitcoin. But it would take a bit of effort on the part of the investor.
Yeah, I mean, we publish the data for free. You can follow on bold.report or ByteTree.com, follow our bold monthly commentary, tells you exactly what to do. We publish the weights. I mean, if you can't be bothered to look at our stuff, it's basically 3-1. Yeah, that will change slowly over time as Bitcoin becomes more volatile or less volatile or whatever.
Yeah.
Assuming it's going to become less volatile, and therefore the Bitcoin weight in the package goes up. But just check in on our site from time to time, and there you have it. But yeah, when they diverge, if you put £25 into Bitcoin and £75 into gold, if that ever gets out of whack, just rebalance it periodically. You don't even have to do it every month. You could just do it yourself every 3 months or whatever. And that's fine. And we're delighted to share that information. And our website's bold.report.
Fantastic. So in order to learn how to do it yourself, until the platforms allow you to use your work and time, we can just look at bold.report, follow that, and if in doubt, 3 parts gold to 1 part Bitcoin, and there you've got the bold fund basically.
So this is our target weight every month
Hmm.
that we have, for Bitcoin and gold. And why is it not going up and down? It should do. That's because I'm doing a demonstration. That's why it's not working. Um, so 2022, Bitcoin was a bit more volatile in a bear market. So the target weight, look at that. You can see 17%.
Hmm.
Then now it's a bit less volatile, so it's 25. That's fine. So that's how we've got the 3-1 thing. But let's just go over the last 1 year, and that target weight is shown in blue. But because Bitcoin and gold prices bounce around each month all over the place, what we're doing at rebalancing every month is bringing that huge weight in Bitcoin, 33% at the end of December, bang, straight back down to target, locking in a profit by selling the good one and adding to the bad one each month. And then what did we do at the end of March? We did the opposite. Bitcoin was terrible, so we added to it. Sorry, at the end of February, we added to Bitcoin at the expense of gold. So by maintaining those weights all the time, you add historically the index. The reason it's done so well against Nasdaq and stuff is not just the returns of Bitcoin and gold. It's the fact that the rebalancing process has added 5 to 7% per year.
Excellent.
It's very important that people do rebalance.
Right. So it's very much about, as you say, the weighting plus the rebalancing, and that's what brings in the extra return.
Yeah.
Fantastic.
Of course, if Bitcoin and gold, were terrible, then it's going to go down. Gold's going to go down, but they're not. And I think the more we have problems with government financing and all the rest of it, these two assets are underpinned. The entire $125 trillion wealth management industry is underweight gold and is yet to engage with Bitcoin.
That's sort of mind-boggling, actually, to think
It
just how
is.
much money is going to go into both of those assets.
Yeah.
Nice. Well, I think, what we've all got to have at least a bit of gold and at least a bit of Bitcoin in order to ride that wave going forward. Charlie Morris from ByteTree and the Bold Fund, thank you very much for joining me. And if you want to know more, have a look at the bold.report, because that will give you an idea of how they're investing in both gold and Bitcoin, what the weighting is, and how they're moving each month. So thank you very much, Charlie Morris. I've been Jasmine Birtles. I'm the founder of MoneyMagpie.com. This has been the Money Magpie Invest Podcast. Like, share, tell all your friends about it, and comment as well. Tell us what you're investing in, what you think about gold, and what you think about Bitcoin. Thanks.